Thank you for watching Edupedia World videos. In this video, we will be understanding about the theoretical concepts of period and closing. Posting period is a tool that is defined to control which accounting period is upon for posting. This is an important tool for organization because it helps to control and monitor the posting periods. So we are imagining that our company creates an annual financial statement once a year, and then they need 12 posting period for their internal monitoring purposes. So we are assuming at this point that we have already created a new company database and have defined the fiscal year as the company year calendar and the sub periods as months. Here we can see an overview of the posting period process. We have already visited this slide in the previous video, but we want to revisit this slide just to set our base. So here we can see that overview of the posting period process. There are three stages in the posting period process. In this topic, we will focus on the period and closing, the last stage of the process. Let us first review each step. In the first stage, we define settings for posting periods. First, we define the main posting period for the fiscal year. Then we define the sub periods in the fiscal year that can be based like an year, quarters, months, or days. The second stage is the operational stage that relates to the everyday work and the entering of the document and manual JE with posting date that will be registered automatically. So subperiods allows the user to control posting within them. That way posting to each month can be controlled. And the third and the final stage is what we will focus in this video. That is the period and closing process. Let us understand about the period and closing. When you create a new company database, you create the posting periods for the first fiscal year. Generally, the fiscal year is the company calendar year. Sub-periods are created automatically by SAP Business One in the fiscal year based on your selected type of sub-period. There are 4 available sub-periods that can be an year, quarter, month, or days. You define the sub-periods based on the company business need. An year has 1 sub-period, quarters has 4 sub-periods, months can contain 12 sub-periods, and days can have any number of sub-periods. Using your selection, the system automatically creates the corresponding number of posting periods. You can change these periods if necessary. A reason for defining the sub-periods will be the ability to lock the past period so that no additional position or the postings can be made by any other user. The third step of period and closing will lead all the PL account balances to be retained earning account and zero the PL accounts. Let us understand the different posting period. One is month end closing and the second is year end closing. So continuing with our assumption, the company's main period is a year, but they also maintain monthly sub-periods. You can decide not to close each sub-period, although it is recommended that you perform monthly period end tasks. This is because you use the sub-periods mainly for internal monitoring purposes. When a company does the year-end closing at the point, the company closes all the sub-periods. Some companies may choose to close each sub-period at the end of each sub-period, since they have already closed sub-periods during the year. They close the last sub-period of the fiscal year. In either case, to prevent user from creating the documents for the previous fiscal year, you can change the status of the period that you are about to close to the closing period. This means that only authorized users can post data, documents, and transaction. This is a key information for implementation people during the implementation. The key purpose of period end closing is to prepare the accounts for submission to the authorities and the verifiers, and therefore involve the resetting of all the PL accounts to zero so that the next period can begin and again collecting the profit and loss data that is relevant to it. An example for our understanding. We are assuming a single period is a quarter of an year. Delivery is done with substantial amount on 31st March. The AR invoice for this delivery was issued on April 2nd. So we can ask ourselves that will this be an issue in the profit and loss report for the first quarter? And what are the effects of this scenario on the period and financial reports? Let us understand with delivery what are the delivery effects. We take the period as January to March, that is our period 1, and there is our delivery, the cost of goods sold, and the inventory account. The cost of goods sold is debited and the inventory account is credited. In the period 1, that is from January to March, where we have delivery as a document, the cost of good has a negative effect on the profitability within the period 1. But when to go to period 2, that is from April till June, where we post our AR invoice, the customer account is debited and the income account is credited. The revenue is thus booked into the period 2. So in the financial reports, it shows a loss for period 1 and a gain in period 2, which should not be the case. So that's why we have period end tasks, just to avoid these type of situation. So we have to ensure that all the period end transactions have been posted properly, including the adjustment and accruals. We have to ensure that all the open journal vouchers has been taken care of, and we have posted all the open journal vouchers. As a best practice, you should reconcile them regularly at the end of each month. Otherwise, you may face a high number of transactions to reconcile at the end of the year, which will simply waste the time. To simplify the process, you can run automatic reconciliations. Lastly, we have to print the reports that includes trial balance, vendor liabilities, inventory audit, and other financial reports. What about the year-end task? You have to post any doubtful debts that you feel may not be recoverable. Then post exchange rate differences and conversion differences. Then post the final transaction for the period in all the modules and any final adjusting entries in the general ledger. Then close the last period of the fiscal year. Then print the reports such as final detailed trial balance or other financial statements. Also, one more important thing that you need to do is to set up a new fiscal year. Thank you.